Okay, let's try that one more time. So I'm Miguel Morel. I'm the founder and CEO of Arkham Intelligence. We are a blockchain analytics company focused on de-anonymizing the blockchain. Today we're going to be talking about the new TA and the future of crypto trading. So I'm going to start with a little bit of a background here by talking a little bit about how people invest in cryptocurrencies and how people trade in order to make money. The first part here is discussing asset fundamentals. So the first piece of investing in any kind of asset is actually understanding what it is that you are investing in. So this includes looking at things like balance sheet data, looking at the executive team of the project or other kind of company that you are investing in, analyzing things like central bank policy, macroeconomics, and other sorts of things that can impact the global economy and therefore asset prices. And then additionally, looking at things like sector trends. For example, AI right now is very popular. Cryptocurrency also goes through different bubbles where things can be very important or things tend to fall out. And all of these things have an impact on price. Next, we can talk a little bit about price data. So many people will ignore things like asset fundamentals. They will say it doesn't even matter what asset they're trading. They can instead use tools such as TradingView, for example, to analyze price data and different kinds of indicators in order to understand whether or not the price of an asset is going to go up or down. And this is what is more so called technical analysis. Now, in addition to this, I posit that there is a new kind of information that exists within the cryptocurrency market and also in other kinds of markets, but is more key for crypto in particular, and this is transaction data. So this means being able to see what we describe as entity positions, so what people are buying and selling. Looking at the new entrants into a particular kind of cryptocurrency or asset, hearing that there's a new type of VC or investor is something that's very important for understanding, the performance of an asset. Looking at large transactions and insider activity, so this means being able to see what the major whales and people inside of the project are doing with their coins is also super important. And then analyzing things like exchange inflows and outflows to try to detect whether on net people are selling or buying that particular asset. Now, what is the issue with this type of transaction data? Well, outside of the cryptocurrency space, this information is guarded by regulators, brokers, and exchanges. You cannot always see what it is that people are actually buying and selling for example, a stock. Now, if somebody is trading a public company stock, for example, and they're taking a very large position in that stock, there are oftentimes public disclosures that need to be made that state the amount of money that you have put into that stock in particular, and therefore where you stand on the cap table. But this isn't always true for example, people who are buying less than 5% of a public company, for example. Now, the good news is that this information exists by default and in public for blockchains. So within the blockchain, anybody can see the transactions that are being made for buying and selling different types of cryptocurrencies. All of the info is completely public because it's on chain. But the issue is that this information is anonymized. It's in the form of an ETH address, it's in the form of a Bitcoin address, and this means that it is not necessarily useful even though it's very public. So what do we think is the future of crypto trading then, given these fundamentals? Well, we believe that using this information from public blockchains is a way to understand who the market players are when you're trying to analyze a particular kind of cryptocurrency. So that means using on-chain analysis to understand what's going on with token projects, for example, what it is that they're doing with their treasuries. Looking at token project insiders, so this means looking at the major VCs, looking at the founding team, the early employees, et cetera, can give you a lot of information about things like sell pressure for a particular coin. Looking at the market makers and liquidity providers will give you insight into some of the major holdings and where it is they're providing liquidity in different venues. Retail investors and traders, this ends up making up the bulk of different kinds of cryptocurrency users. People who come in and they buy coins, the overwhelming majority of those holders are going to be small retail investors. You can look at institutional investors and traders. So these are people like Jane Street, Jump Trading, et cetera, VCs like Andreessen Horowitz. And then, of course, something that Arkham has since become famous for, analyzing governments and regulators to see what they're doing with their Bitcoin, and in particular when they start dumping. So what does this mean for Arkham? What this means for Arkham is that we have created a platform where people can come in and actually analyze all of the different wallets of a particular entity all in a single place, in a single platform. These entities, they hold many different kinds of coins on many different networks, many different addresses. And without the power of a blockchain analytics platform like Arkham, you wouldn't be able to actually assess what it is these people are doing in real time. So what is it exactly that we do at Arkham, and how is it that we get access to all of this information? Well, first and foremost, we start in the same place as everyone else by analyzing the blockchain itself and looking at blockchain data. This means ingesting as much information about the networks that we support as possible. So currently we support over 10 networks, obviously all of the major ones, Bitcoin, Ethereum, and so forth. We also support Tron, BNB Chain, and a number of other networks as well. Once we have ingested all of this publicly available information about blockchain data, we then use our engineering and data science teams in order to do what we call entity classification. So this, on a very high level, essentially means taking all of these different addresses, and even if we don't necessarily know who the people who own those addresses are, we can at least associate them with one another. So if you have 10 different types of addresses, how do you know if those 10 different addresses are owned by 10 different people, or if there's one person who owns all 10? This is the nature of using data science and machine learning techniques in order to understand which entity actually owns all of those different addresses, and then you can cluster them together as shown in the slide before. Once we have all of this information, we then upload it all into one platform, which allows people to search up in real time the names or different addresses that they're interested in order to then query them and try to understand the nature of all of the different market players within the cryptocurrency industry. Now, what is some of the background for why we describe this as the future of TA, and the background for how this has impacted trading in particular? In the top left corner, we have an example of bartering, something that is very popular here in a place such as Istanbul or in Turkey, for example, where the nature of trading hundreds of years ago was such that people would buy and sell goods in a way that was essentially anonymous. You would go to a market, you could go and purchase a particular good or service, you would pay the person in cash, and there wasn't necessarily a centralized registry for this information. There wasn't a way for anybody on a high level to be able to analyze the market of these different goods and services, which means that the markets are very fragmented. It means that the market for something in Istanbul could have been very different for the market from Amsterdam or from London or from New York, even if at the end of the day you were buying and selling the same good. This later evolved into more centralized markets, such as, for example, the stock market, which you can see in the top right corner, where then people all in a single place, there would be a single centralized co-location for buying and selling a particular good, such as the stock of a given company. And there would be a centralized registry, previously done on paper, now it has gone digital, where you could look at all of the different ticks for people buying and selling that good, even if you didn't necessarily know who the buyers and sellers were, and there would be a centralized price for that particular asset. This has then later moved almost entirely online. The idea of being in a stock trading pit now seems like it's from antiquity, given that now the overwhelming majority of trading is electronic, and we have things such as high-frequency trading firms that conduct all of their volume online, and they're not even necessarily in person looking at all of these different trades. But it essentially means that all of this information is now recorded. It's recorded in a centralized ledger, which can be seen by government institutions, for example, or can be seen by banks or other kinds of trading firms in order to analyze the different types of trends that are existing for these markets and these assets on a global scale. But the interesting thing about it is that, as discussed in the previous slides, all of this is held within centralized servers. The only way to get access to it is by having native access to these things, such as the New York Stock Exchange, or by being inside of the SEC and actually being able to see all of the trades that people are placing. And this is where a platform like Arkham comes in order to fundamentally change the way people do research about what is being bought and what is being sold. With Arkham, you don't need permission as a user from any one of these platforms in order to get access to the information about what people are doing with their cryptocurrencies and what people are doing with their different assets. You have the ability to, using blockchain technology, come in and actually analyze any network from Bitcoin to Ethereum or other types of EVM chains and be able to see from the beginning of the asset's history up until real time all of the different people who are buying and selling that asset, where it is being listed, what the volume of these places are, and this is something that previously did not exist anywhere in the world. And so as assets and commodities and stocks continue to move on-chain and continue to use blockchain technology in order to settle these trades, our vision at Arkham is that eventually all assets will be able to be tracked to the same degree in public without needing to go through third-party custodians or institutions. And once we have all of this information, it will make markets significantly more transparent, auditable, and efficient in the way that blockchains have been meant to be from the very beginning. So let's look at a case study, such as the Bitcoin ETFs. So Arkham has identified the on-chain location of all 10 Bitcoin ETFs. So these Bitcoin ETFs were a way for the crypto market to be able to enter traditional finance and get listed on the stock exchange. So all of these ETFs traditionally, before cryptocurrency, they settle once a day, or they settle once a week, or they settle once a month. And this information is then published online with regulatory filings to show the investors what the current status is of that ETF, how much money is being invested in it, what's the performance, etc. Now, the interesting thing about cryptocurrency ETFs versus other ones is that the assets are actually being settled on-chain. So what that means is we don't have to wait for Fidelity or for BlackRock or for any one of these institutional providers or custodians to do their reporting of how much Bitcoin they hold. We can actually just analyze it on chain, assuming that you've managed to find their wallets, which is the entire premise of Arkham. And so that means that in real time, we are able to actually analyze the inflows and the outflows of these different funds in order to, before they even report the amount of Bitcoin that is being bought and sold on a daily basis, we already know how much Bitcoin has been bought or sold and what the net flows are of that particular ETF before they actually report it. Okay, let's see. Next, let's go through the case study of BTC mining. So Bitcoin miners are also a very interesting industry to actually take a look at. Many of these companies are publicly listed, which means that they have quarterly reporting obligations, such as their revenues and their losses and their cost of operations. Now, the interesting thing about Bitcoin miners is that all of their revenue comes from mining Bitcoin. So you can make decisions about the amount of revenue that you think that a Bitcoin miner is going to make, or the amount of profit that a Bitcoin miner is going to make, based on the amount of Bitcoin that they're mining and then they're selling on exchanges. So every quarter, large banks, institutional investors, and so forth will make estimates for the amount of money that they believe a company is going to make. And then depending on whether or not they beat their earnings or did not beat their earnings, the stock will go up or down. But again, as we stated before, you don't necessarily have to wait for them to tell you what their revenues are, because theoretically you should be able to detect all of them on chain. And this is exactly what we have done at Arkham. We have gone through and de-anonymized the wallets of major Bitcoin miners in order to understand more about their flows and about their revenues and losses prior to them actually being released in a way that is very popular with institutional investors attempting to understand what the relevant flows are and the stock performance of these assets is going to be. In real time, this means tracking the production of these Bitcoins from the miners. And once you actually see them producing and mining these different Bitcoins and then sending them to exchanges, you can then make estimates for the amount of money that you believe that they will make in a given quarter, given that you have all of the information about the flows. So what does this mean for us, and what does it mean about coming into different markets and expanding beyond the digital world and North America? Well, it means that we've decided to invest in markets that are incredibly invested in crypto, invested in blockchain, and invested in trading. For Arkham in particular, we have a very large user base here in Turkey and in Istanbul. It's actually our fourth largest market across the globe. Arkham operates in a variety of different countries, excluding the ones that have been sanctioned by the US. But Turkey is one of the largest ones for us. And so we've chosen to invest, for example, by coming and being here at Istanbul Blockchain Week, which we're very excited about. We've sponsored one of the largest soccer teams in Turkey, Galatasaray. We've made our platform available in Turkish and a number of other languages in order to help our community. We partnered with local projects on the ground, such as Ninja Traders. And we've hosted a variety of different events and hired many people here on the ground within Turkey, which we plan on continuing to expand. And so I want to thank everyone very much for coming to my talk and looking at Arkham. I highly recommend everyone come and follow us on Arkham Intel on Twitter. You can also find us at platform.arkhamintelligence.com in order to understand more about what it is that we do. We're hosting an event tonight on Galatasaray Island, which everyone is welcome to register for. We've posted it on our Twitter account for people to be able to register. It begins at 9 p.m. tonight with Galatasaray as well as Telegram. And so thank you very much for having me.